Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the headlines tonight. Sebi cracks down on self-styled financial advisors on social media, acts against two so-called finfluencers in 3 days. One of them is forced to disgorge more than 6 crore rupees in profits. Reserve Bank Governor alerts on corporate governance gaps in banks, emphasizes preventive measures, says RBI has mitigated the impact, also says banks are concealing true status of stressed loans. It's a big Business Today TV exclusive. Ola Electric to bid for lithium mining in India. Company says it's part of its reverse integration. CFO calls reports by IPO by the end of this year speculative. Sensex and Nifty extend gains to a third consecutive session, cheered by the debt ceiling agreement in the US. Bank Nifty at a record high. Fresh twist to the Twitter saga under Elon Musk. Microblogging site could be forced to exit Europe after pulling out of the voluntary EU disinformation code. Sebi tightening the noose around self-styled financial advisors or finfluencers as they're commonly known these days. In the past 3 days alone, 2 unregistered investment advisors have been penalized. There are indications that this could be just the start of a Sebi crackdown on financial advice peddlers.
Some people, they want to get better return.
He is a self-styled investment advisor with more than 10 lakh followers on YouTube and more than 5 lakh on Twitter, doling out investment advice to investors, all without having the necessary Sebi registration. His YouTube site even boasts that he is not Sebi certified. Still, investors seem to flock to his videos. On Friday, Sebi cracked down on him and his advisory Manson Consulting and co-promoter Mangayar Karasi Sundar, with all 3 having to return the advisory fee. According to the settlement, each of them will pay over 15 lakh rupees for a total of 46 lakh 80,000 rupees. The 3 parties have also agreed to disgorge more than 6 crore rupees, which includes profit from advisory services and interest on the profit, and to refrain from purchasing, selling or otherwise dealing in securities for a period of 1 year following the passing of the settlement order. 2 days after Sundar, Sebi targeted another finfluencer, Gunjan Verma. The capital market regulator found Verma have been offering unregistered investment advice to clients since 2018 and fined her 1 lakh rupees. The action comes just days after Finance Minister Nirmala Sitharaman flagged her concerns over social media finfluencers and channels.
So, social influencers, influencers are all out there, but a very strong sense of caution is required in each one of us to make sure that we do double checking, counter checking, talking with people. Don't go as a flock into something because somebody else has gone and you also go without doing your due diligence. We have to be careful. It's our hard-worked money.
Sebi rules make it clear that investment advice cannot be doled out by the unregistered. Even those registered under Sebi guidelines have to ensure disclaimers and various disclosure to prevent front-running and other illegal trading activities. Bureau Report, Business Today Television.
The Governor of the Reserve Bank of India has warned of gaps in corporate governance in certain banks. In his inaugural address at the Conference of Directors of Private Banks, the Governor warned that these gaps in corporate governance may cause volatility in the sector and that it was up to the boards and management of the banks to prevent gaps from creeping in. Shaktikanta Das, however, added that recent steps by the RBI have mitigated the impact of some of these governance gaps. The Governor urged directors to pay more attention to accounting policies, warning that banks were using novel ways to hide real status of stressed loans. Ola Electric will bid for lithium mining in India. In an exclusive conversation, the company said having lithium on tap is a crucial part of its reverse integration plan. India's largest electric two-wheeler company also said that it's welcomed Tesla's entry into the country, but insisted the Elon Musk-owned company should not be given any special privileges. Ola also termed as speculative the recent reports of it going public by the end of this year.
See, all these reports in the public, I would probably label them as speculation, right? If and when we file a DRHP or have a plan, right, firstly, we'll share it with the regulatory authorities and obviously the media and then all our stakeholders.
So, as of now, there are no IPO plans, you're not confirming, not denying?
Yeah, I don't think these are things that we can even discuss on the public, because the right process there is, even if you have, if you come there and if you have a plan, it's first regulatory, right? Then comes the public discussions.
You know, Bhavish also tweeted regarding that cell gigafactory manufacturing of lithium-ion cells, company now focusing towards small commercial vehicles. Give us a outline of the whole development there.
See, the part of the cell gigafactory that is public is the fact that we have won a 20 gigawatt hour PLI ACC scheme, right? So that part is absolutely public, and it is our responsibility to keep updating the government from time to time on the progress. In fact, we have fortnightly meetings with the government to update them on the progress, because this is a very, in the government's words, this is a very important project for the country, because it's a high-tech cell manufacturing area globally. And, you know, India has all the ingredients to break the monopoly that China has today. 90% of cell manufacture in the world is in China, right? But China does not have any lithium, right? It is just the intelligent capex and technology that they've invested in. And India wants to become a global hub of cell manufacture, just like the other 13 or 14 sectors, high-tech sectors where government has announced PLIs. So the government is picking and choosing which area to play in and create an impact at the world stage. So our cell factory has started, and we are on track with the timelines that we are committed to the government of India. And hence we have sort of reported the progress also, both in the private and the public domain. As you saw, we are done with our foundations. We will come live sometime in November. We have committed to the government that the first gigawatt hour will be commissioned before the end of this calendar year. If you look at the discoveries of lithium that are happening, by the way, lithium is in plenty in the world actually. It's not a scarce mineral. It is just that we have not explored it enough simply because there were no EV vehicles earlier. So if you look at India itself, two great discoveries have been announced in Rajasthan and Jammu Kashmir. And we believe the state governments will come into a public tendering process soon. And obviously any EV company that is setting up a gigafactory will be interested in the tendering process. Now the whole ecosystem.
So Ola will also be looking at tendering for mining and mining the lithium from its reserves.
Yeah, any player that sets up a gigafactory will look to backward integration, right?
Okay.
Whether it results in a direct bid or a bid in a joint venture with somebody or a partnership are all nuances. But that's the normal direction for a gigafactory player. Even if you see all the global players, they'll go into calcination, precursor, refining, concentrating, and the mine. Right? That's the core supply chain which China has developed, for example, given its EV industry. And that's what we are keen to bring into India. And that is what will make India another hub of cell manufacturing.
Also, Arun, Tesla actually plans to come to India. Is Ola threatened with it?
No, absolutely not. See, anybody in India is fundamentally a democracy. It has stable tax policies, and we've had terrific encouragement for the industry in the last decade, especially the last 5 years, where the PLI schemes have made a big difference to the Indian manufacturing ecosystem. So Tesla should come if they want to come, and they should come on even terms instead of crying about duties, right? They should commit capital to the country and manufacture like all of us, go through the normal local ecosystems, and if they learn to be an Indian in India, they're welcome. Why Tesla? Anybody should be welcome, right? But what is most important is create local jobs, create the local ecosystem, create the local GDP, and ensure that you export from the country so that the country's interests and country's foreign exchange, country's growth are first in mind. You shouldn't come here with a mindset that I want a duty subsidy. I'll take money out of the country in terms of dividends and profitability. That doesn't work in India anymore.
Is Elon Musk now looking at shutting Twitter in Europe, or will the microblogging site pay a fine of nearly 6% of its revenue? These are some of the speculations doing the rounds after Twitter decided to withdraw from a European Union agreement targeting online disinformation. BTTV's Rashna Dhanrajani has more on this.
Twitter has pulled out of Europe's voluntary code of practice against misinformation. Though this was a voluntary code, this has raised concerns about Twitter's accessibility across Europe in the coming months when this code will become a legislation in the EU. If the Elon Musk-led company further fails to abide by the code, which from August will be a legislation in the form of the DSA, the Digital Services Act, the blue bird will be made to fly out of Europe. The code was launched in June last year with an aim to prevent profiteering from disinformation and fake news. And it also aims at increasing transparency and curbing the spread of bots and fake accounts. EU's Commissioner Thierry Breton tweeted that Twitter has walked out of the voluntary code, but it won't be able to get away from it for very long when this code will become a legal obligation. This is the same commissioner who had issued a subtle warning to Elon Musk the day he finished the Twitter acquisition back in October 2022. When Musk's famous tweet, "Bird is freed," indicated the completion of his $44 billion sale, Breton replied to the tweet saying that in Europe, the bird will fly by the rules laid down by the EU. A dozen of tech companies like Meta, Google, and even TikTok have already signed up for the DSA and are a part of the code. Companies that sign this code can decide which pledges to make, such as cooperating with fact-checkers or tracking political advertising and taking them down. However, Elon Musk's Twitter hasn't signed up for anything yet.
Massive cost overruns have been reported in some of the biggest infrastructure projects in the country. A report by the Ministry of Statistics and Program Implementation, a total of 384 infrastructure projects have a cost overrun of 4.67 trillion rupees. That's nearly 22% of their sanctioned cost. The report covers projects with a minimum cost overlay of 1.5 billion rupees. Stock markets kicked off the week on a stronger note thanks to firm global cues and expectations of strong domestic economic growth. However, the gains were trimmed slightly as investors took some money off the table amid the optimism. Bank Nifty hitting a record high, supported by good news from the US on the debt ceiling as well. The Sensex was up 345 points, Nifty also up about 100 points today. M&M, Titan, Coal India, Tata Steel, Ultratech Cement, a nice mixed bag of gainers. While on the downside, we saw ONGC, Divi's Lab, Power Grid, HCL Tech and Maruti lag behind in trade today. Global Health, the parent company of Medanta Hospitals, reported a net profit of 101 crore rupees in Jan to March, a year-on-year jump of almost 5 times due to increase in bed capacity and higher inpatient footfalls. Revenue for the company rose 37% to 732 crore rupees. Which is the company's highest ever quarterly revenue. My colleague Sakshi Batra spoke to Pankaj Sani, Group CEO of the company, about the healthcare majors' expansion plans going forward.
Expansion plans like, the Noida facility, which you say is going to come up in FY25. Help us understand a bit more granular details, both greenfield, brownfield opportunities. How are you looking at those in the upcoming years? And newer hospitals like you pointed out. And if at all, any additional capacities in the existing ones also planned?
Absolutely. So we're currently at about 2,700 beds. By FY25, we will scale that to approximately 4,000 beds. And that will come off the backs of 3 or 4 distinct initiatives that we've triggered. One, of course, is the expansion in our existing hospitals. We still have bed growth in Lucknow and Patna. Lucknow is currently at 601 beds as at March. That will scale to 950. Patna is at 330, that will scale to 650. And we have some remodeling, renovation and some work also happening in our Gurgaon facility with our new mother and child services coming in, building out additional oncology capabilities in our Gurgaon facility as well. So the first avenue of growth will be the existing hospitals where we'll be adding beds. And keep in mind, since we've already got superstructure, since we've already put a bunch of the capex in, a lot of that growth will come at a significantly lower cost in terms of both capex and opex, and we will be able to get the benefits of economies of scale in those units. The second aspect is hospitals that are already underway. That includes our Noida facility, which will be 550 beds. That's under construction and moving along well. We've already come out of the ground in terms of the construction happening there. That facility will come on board. And last quarter, we also announced a O&M partnership in Indore for a 350-bed hospital there. We hope to begin construction work on that soon. So that's the second aspect, which is, slightly maybe medium to longer term in terms of the bed additions. And then there are a few more sticks in the fire. We have been engaging with various parties to look at innovative models, some at the asset-like O&M model, some in the greenfield way. So all options open across the areas that we want to go in. But like I said, rather than just kind of chasing the check the box, all these steps are being done in a very deliberate manner with a slightly medium to longer term horizon in mind.
The Sensex just 737 points away from its record high, with across-the-board buying taking nearly all indices higher this month. A lot of this is due to the return of FIIs, who've pumped in nearly 37,000 crore rupees in Indian equities this month. BTTV's Udayan Mukherjee spoke to Sunil Singhania of Abacus Asset Management about all the cheer that we're seeing in stock markets.
Markets have bounced back and within striking distance of all-time highs. What do you think has caused this flourishing out of relief in the market? Is it because some of the global headwinds have receded, or do you think there is greater confidence in the earnings story now?
No, so I think, Udayan, 22 obviously was a very challenging year, and the first quarter we started with optimism, and then you had the Silicon Valley Bank and some of the other banks going belly up, and on top of it we had this whole concern about the debt ceiling. I think as we move forward, second half, according to us, is going to be pretty decent in terms of positive news flow. One is inflation is surely out of the way. We have already seen the peak, and just by base effect, I think the second half, starting June itself, we'll start to see inflation surprise positively, with the headline numbers coming in much lower. And the same trajectory would therefore be repeated on the interest rate side. And I think now with the debt ceiling also issue at least temporarily behind us, I think the risk off which we were seeing is now back to risk on. Technology companies, particularly the large tech, have seen a big rebound. And I think generally investors are now getting more confident that the second half of 23 should be much better for the global economy than what we have seen over the last 18 months. So I think it's a combination of a lot of things, and obviously India has benefited out of it. We have seen flows, come back in a vengeance. I think May will be almost a $5 billion positive FII flows after a long, long time. And again, our indication with speaking to a lot of global allocators is one of optimism as far as flows into India is concerned.
You mentioned the elections, Sunil. At some point as we get towards winter, I think it will become more and more of an issue, at least a talking point for the market. How do you see that affecting market performance over the next 12 months or so?
So traditionally in the run-up to the elections, the markets tend to do well. This time should be no different. Obviously the markets are going to debate what is going to happen, and obviously the one thing which the markets would love is continuity, and that seems to be also a big probability. But elections are elections, one doesn't know. So I think towards the end of the calendar year 23, which is when most probably the dates of the elections and all will start to be speculated of when it is going to happen, and all the permutations and combinations of who's going to align with whom will start to play in. I think there might be a little bit of nervous maybe for a couple of months till there is clarity. But I think there is a reason to be more optimistic than pessimistic at this point of time.
What would be a good way to position the portfolio now? I mean, if your belief is that some of the risks have receded now and the global factors have settled, is it a good kind of a overall macro construct in which you start backing small caps and mid caps again over large caps, because it seems a bit more of a stable situation for the market, or not quite?
So again, last 3-4 years have been a yo-yo kind of years. We had one good year, and then we had two challenging years because of COVID, and then we are just coming up as far as recovery is concerned. And even this recovery has been full of, I would say, news flows which have been challenging, right from interest rates going up quite significantly, and some large financial institutions like Credit Suisse and some regional banks in US going belly up. So it's not been a smooth last 4-5 years. I think the next 3-4-5 years look to be much more stable. And in that context, I think if India continues with the way it is doing, and this whole focus on manufacturing and infrastructure development, and even this whole talk about 2047, which is 100 years of independence, India being targeted as a developed country, I think if we go in that direction, I think the next 4-5 years can be really path-breaking. If we have like 3-4-5 years of constant 7% plus GDP growth rate, then some of the sectors and some of the companies can really become much larger than what they are. So we are looking at it with a lot of optimism. Obviously, the whole focus is going to be on domestic economy and domestic related sectors, but India is also coming out quite visibly as a big beneficiary of the China Plus One and the Euro Plus One manufacturing, I would say, move. We have already seen large companies like Apple and Tesla indicate their intention of setting up manufacturing bases in India. And I would say that would be the catalyst which India needed to go really fast in terms of their growth. I definitely do believe that next 5 years have the potential of India looking at growth like never before.
You've always been a fan of the manufacturing theme, Sunil, and you can find a lot of interesting mid-caps and small caps as a portfolio manager which can benefit from the manufacturing theme. So could you tell me what are the best hunting grounds for you? I mean, because you could play manufacturing through various kinds of themes. Which are your favorite ones?
So, unfortunately, within this segment or this sector or this theme has been quite in the talk as far as market participants are concerned for the last 1.5 years, and not too many stocks are cheap. But having said that, I think manufacturing is benefiting from multiple reasons. One is, I mentioned to you, this whole move towards China Plus One and Euro Plus One. So exports, as and when the global economy revives, look decent. Right now, the global economy has been quite slow, so exports have not been that buoyant, but that will change. Second is obviously the raw material and the input costs are coming down, which should help, I would say, the margin front. And I think overall there is going to be a scale benefit which in some of these Indian companies get. So the advantage which India has is that it has a huge domestic market, and then if exports do happen, that is sort of a cherry on the cake. From our perspective, obviously the engineering side, we are quite optimistic. We are also optimistic on the traditional Indian, I would say, advantage sectors like IT services. We all know that ChatGPT and all are near-term threats, but India has global competitiveness as far as IT services is concerned. And then you have garments and chemicals and pharma, which again are strong points as far as Indian manufacturing is concerned. So all these can be, really good. Apart from the export side, I think, import substitution can be a big thing. So, electronics, we're already seeing how the EMS space is flourishing as far as markets are concerned. Stocks are just surging. And same is the case with defense. I think from our side, we like both the spaces, but in the near term, there is a little bit of over-exuberance. So we'll wait for a cool-off before we look at this. But as I said, India offers opportunities across sectors.
Watch the full exclusive interview on our social media handles and Business Today website, as well as businesstoday.in. That's all from us tonight. Thanks so much for watching.